Well, hello, everybody. My name is Mike Campos. I am with San Diego Funding here in lovely San Diego. I've been in the mortgage industry for over 16 years, and I've had positions that included being an underwriter, construction loan officer, and I work inside of a real estate company now, primarily doing purchase real estate transactions. I fund commercial loans, construction loans, and residential financing loans, and we offer all kinds of different loan programs, from traditional FHA, VA loans to portfolio high net worth clientele loans. Ask me today. I'm happy to help out however I can. Well, I am experimenting with Facebook. Apologize. I am experimenting with YouTube Live. I want to get my information out there. I believe that if I can help consumers know what the challenges and issues are early and upfront in the process, it'll help avoid issues and delays during your purchase process. So today, I am going to talk about the top 10 mistakes home buyers make. Number one, going into escrow without a pre-approval. This is a very important piece in the process, and many real estate professionals help vet the home buyer before accepting an offer and going into escrow. But we really want to have the customer's income, assets, and credit report reviewed by a loan officer prior to going into escrow to make sure that you can actually close escrow on time and on schedule. The other second one is putting your financial documentation away, packing your data and putting it away in storage as you're packing and getting ready to move out. We need access to your documents, so please make sure that your tax returns and your bank statements are easily accessible, covering the last couple years with regards to tax returns. Transferring or quitting your job during the purchase process. Now, the purchase process is not only when you are in escrow, but while you're shopping for real estate as well. So that is what we call the purchase process. So if you're changing jobs, let us know so we can help advise you before you do so to make sure it doesn't impact your ability to get the loan approved. For example, if you are on a base salary and you earn commissions and you change jobs, well, guess what? Your commission income would probably go to zero on most loan programs because you now don't have a 2-year average of earning that commission income. Making large ticket item purchases. Now, this one has actually been quite an interesting experience for me. Many years ago, a home buyer during the loan process purchased $20,000, $30,000 worth of appliances and televisions and so forth, escrow process. And we find out as a lender, we find out. So let me explain. We pull your credit report in order to pre-approve your loan. That same credit report is used to underwrite and approve your loan. And right before funding, the lender does what's called a soft credit pull. It doesn't have a negative impact on your credit score, but we check your credit report one more time to make sure that there's no material changes that took place that would impact your ability to have that loan approval. So right before we're closing escrow, we did this soft credit pull and found out the customer had the $26,000 in new credit debt with Best Buy. It's not Best Buy's fault. With Best Buy, and had now another $400 a month in credit card payments, which made them ineligible for the loan approval. So let's avoid that, please, and just communicate with us when you're making purchase transactions. Random deposits is another one right now. And let me explain. When we collect your bank statements and your transaction histories to help document that you have the cash available to close escrow and to meet the lender reserve requirements, we're also going to see large deposits in your bank account. $1,000 from your friend, distribution from your company, a bonus, maybe you sold a car, or you literally just put cash in your bank account. We have to document and paper trail the sources of all those deposits. So communicate with us that you're doing such a thing during your purchase process. Let your loan officer know that you're making these large deposits or where this money's coming from, because we are going to request that we paper trail those deposits, whether it's a copy of a check from your employer or from your company showing that it was a distribution, a copy of bill of sale if you sold a car in order to get the cash in your account needed to close escrow. we, by federal regulations, have to document the sources of the funds being used to qualify you for a loan. Leaving town and number 8 is taking more than 24 hours to respond to any lender requests. This process is very paperwork intensive, whether you're buying a $100,000 house, whether you are buying a $10 million house, whether this is your primary residence or your vacation home, or if you have tens of millions of dollars in the bank or not. The banks, because of federal regulations, we have to paper trail a lot of data that is going to require your attention. And because of federal regulations and these short escrow time periods in purchasing a house, we need you available so we can get our job done. And taking more than 24 hours to respond to a request can have a negative impact towards the end of your transaction and delivering the loan and closing escrow on time. And we want to help make sure that your movers and your SDG&E guy and so forth are going to be at the house on the right day and the right time. And we don't want to have you reschedule those things because of documentation requirement delays. So thank you in advance for staying on top of things. The last one, actually number 9 of this top 10, is keeping your legal matters a secret. Through this loan process, we will find out about judgments, a divorce that may be on a handshake agreement and not executed properly. Those types of things will have a negative impact in getting your loan approved or delivering on time. A recent conversation with a buyer was that his divorce papers confirmed that he owed about $600 a month in child support, but there was an agreement between the spouses that something else were to be in lieu of the child support. But as a lender, we have to document and follow the court order. So during the escrow process, he had to go to an attorney and go request a court order to confirm the handshake agreement. And that was an additional expense that the buyer had an additional expense he had to pay. That it was going on. Document everything as best you can, and we're here to help. We don't want to know, and we don't personally want to be involved in people's personal financial personal life. But these are things that the banks require, and we just want to know so we can help you buy a property and move in as quickly and stress-free as possible. And our last one for the day, number 10, not telling your loan officer about bank accounts and other financial obligations. We find out through the documentation process, we will see deposits coming from your other corporation that you never told us about, which is going to require us to paper trail that other corporation. So, hey, we're here to help. We are licensed for a reason. We have attorney-client privilege, secrecy, and we appreciate the opportunity to work with you and appreciate the opportunity to serve and help you with the American dream. So as a loan officer, I'm here to help anytime. If you guys would like a copy of my top 10 mistakes, feel free to message me below, and I look forward to talking to you soon.